So I put down some of the actual numbers of what has happened in the last 5 years. India's nominal GDP growth has been 10.5%. Real GDP growth close to 5% CAGR. Equity earnings growth is 20%. Equity index returns 24%. These are all CAGR number, annualized returns. Rupee volatility has been 4%. Inflation is 5.6. And we've also offered a real return, inflation adjusted on government securities of 1.4%. Now, what do these numbers tell you? All these numbers are top of the line among all emerging markets. If you take a emerging market average or take the best performing emerging market, India will feature at the top in almost all these categories, whether it was low volatility for currency, stable inflation, high real rates compared to other countries, high GDP growth, stellar earnings growth from equity, and equity returns are also one of the best in the world. And still, the outcome is that after 5 years, we get to a year where we have hardly any flows. And in fact, if you look at the totality of flows, you will find that in FY21 and 22, we saw very large gross inflows of 85 billion dollars, and our repatriation, which was money flowing out, was much smaller, right? You can see that 18 billion became 27, 29, but recently repatriation has become 51 billion. So a large amount of corporates, you could say that they have sort of taken out their money, which came through FDI. In colloquial terms, you could say that they have booked profit and gone out, right? And also the FDI coming out from India, which is Indians investing outside, which is FDI by India. That number has also gone from about 13 billion to about 29 billion.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.